Hey, good afternoon, everyone, and welcome. My name is Alisa Sladzinska, and I work for the City of Chicago Department of Business Affairs and Consumer Protection, BACP. Welcome to the BACP Business Education Workshop Webinar Series. We have adapted our regular business education workshops at City Hall into these webinars until further notice. On behalf of our Commissioner, Rosa Escarino, I want to inform you that business licenses can be processed online where applicable by visiting chicagobusinessdirect.org. And just note that any websites or emails I mention will be posted in the chat box. If you are part of the BACP Entrepreneur Certificate Program, you can get credit for joining this webinar by sending an email to bacpoutreach@cityofchicago.org. If you want to learn about the program, please visit chicago.gov/business education. To help guide your business and employees during Chicago's reopening process, please visit chicago.gov/reopening. Also, you can receive targeted emergency alerts for the business community by opting in to CIBC emergency alerts. If you are interested, please visit chicago.gov/CIBC alerts. And once again, all those websites will be posted in the chat box, so you'll be able to reference them there. And we encourage attendees to ask questions. Please use the chat box and send your questions to all panelists. There will be a question and answer session at the end of the presentation. And today's webinar will be Understanding the 5 C's of Credit from a Lender's Perspective, presented by the CIBC Bank. And with us today, we have Annette Vega and Charnel Curtis Martin. Welcome. Annette is going to be presenting first. So welcome, Annette.
Thank you. Thank you, Elisa, for the handoff. Greatly appreciated. Again, like Elisa mentioned, my name is Annette Vega, and I work in the Community Development Group. We work with small business owners, entrepreneurs, and even startup businesses. If you have an idea and you want to build a business, we can help you at CIBC. Today, Charnel Curtis Martin, my colleague, joins me. And she will also make her introduction. Charnel?
Thank you, Annette. Hi, everyone. This is Charnel Curtis Martin, also a relationship manager at CIBC Bank, working with small businesses like yourselves or those thinking about small business. And Annette and I are going to go over everything that we can think of to share about our 20 plus years individually of experience working with small businesses. So we hope we are of assistance to you today. And Annette, you take it off.
Thank you, Charnel. So we are going to talk about CIBC small business financing products. How much money do you need? What do you need financing for? Buying supplies and inventory while waiting to get paid, paying payroll and rent, buying equipment and fixtures, purchasing a computer or technology upgrades, buying the actual business. Prioritize those areas where your options are limited to paying in cash, and review your alternatives where there may be another way. For example, it is not necessary to pay all cash for a delivery truck when you can rent or lease one. So right now, as a business owner, you may be looking to buy the business, a new business, or maybe purchase a new computer for the business, do some technology upgrades, whatever it may be. You need to know basically what you need financing for. This is very important. Paying in cash is always good, but reviewing your alternatives is also important. Where to get the money? So entrepreneurs have a wide variety of options when it comes to funding. Below is a list of possible options for a small business to research and consider regarding lender types. Lending options for small businesses. There's banks like us, credit unions, SBA loans, microfinance options, WBDC, Acción, now Allies in the community, Chicago neighborhood initiatives, crowdfunding, asset-based lending, factoring, online business lending, such as Cabbage, Lending Club, On Deck, Lending Circle, etc. These are all lending options for small businesses. So just keep in mind that there are options when it comes to funding. What matters to lenders? What do we look for when we're taking care of a client? We look at the 5C's of credit. We look at the capacity, credit and character, collateral, capitalization, and conditions. Now more than ever, conditions are very important. Ability to repay the loan. What are your monthly fixed expenses? Monthly rent, car note, student loans, credit card debt, how you intend to pay the loan back, business, personal, both. Other expected loan payments. Calculating your global cash flow. All income from business and personal minus all income from business and personal minus all personal expenses and debt. Remaining amount should cover the monthly loan payment. I'll go over that again. So calculating your global cash flow. So all income from business and personal minus all personal expenses and debt. Remaining amount should cover the monthly loan payment. So to put an example, if you have $1,000 of business and personal income and you have $1,000 in personal expenses and debt, you basically are at a break even. So if you're at a break even, it would be difficult for you to pay or cover a loan payment. So we want to make sure that you have above and beyond your your income so that you can repay the debt. So credit and character. Credit and character is based on 3 credit bureaus. So we look at 3 different credit bureaus: TransUnion, Experian, and Equifax. So basically, a credit bureau is your report card. It tells us for small business loans, you know, we look at, many lenders will still look at one's personal credit report. Most small business loans are personally guaranteed, and that's why we still look at your personal credit report. FICO scores will range from 300 to 850. Items such as bankruptcy, tax liens, judgments, child support, and arrears can be an automatic denial for many lenders. So it's very important that you take a look at your credit report at least once a year. It is free, something that is offered by some banks where you can pull your credit and just take a look at what's out there. You'd be surprised. Sometimes there's things out there that you are not even aware of. So keep in mind that your credit report is basically a report card for us to look at how your payment history is. So important, not just for credit. Your credit report is also for apartment renting, to find a job, to get insurance. So major factors contributing to your credit score. So past payment history is 35%. Credit usage ratio is 30%. Credit length is 15%. Inquiries 10%, and types is 10%. So everything has a little bit to do with how it affects your credit score. The next item we'll be talking about is collateral. So collateral is the business and or personal assets pledged to help secure the loan. Common types of collateral are equity in your home, accounts receivable, inventory of the business, and equipment. Lenders go through an evaluation of the collateral to determine how much they can lend. So for instance, collateral can be your car, it could be your home, it could be equipment, or even your accounts receivables for your business. So the bank looks at this in order to make a decision on lending funds to the business. Capitalization. Capitalization is the amount of money the owner personally invests into the company. Lenders are usually more willing to lend to someone who has invested some of their own money into the business. No precise measure or amount of enough capital. Rather, it is specific to each deal. Conditions. Internal factors inside the business. So loan proceeds, working capital versus equipment versus inventory versus renovations. So in other words, loan proceeds, what are they for? Are they for working capital versus equipment versus inventory or renovations? We look at all those factors to see what the funds are going to be utilized for and what the conditions are. External factors outside the business. So economic, environmental, legislative, and industrial. Will a certain law affect the business's industry? Is the industry growing or diminishing? What's the competitive landscape of your industry? So we all know that we're going through a pandemic. So that has an external factor on many businesses, especially economic. So that has impacted a lot of businesses in many ways. Also, when it comes to the business's industry, how certain laws can affect that business industry. Is the industry growing or diminishing? A lot of businesses were affected, closed down by the pandemic. So we look at external factors, how they affect, how they would affect the ability to repay the loan. How to get started. Securing a loan begins by knowing what your lender requires. For a business loan, a lender typically requires the following: business financial statements, business tax returns, business plan with budget or projections, personal financial statements, personal tax returns. So be ready to answer questions about your business. Be prepared to tell lenders why you need the money and to be as precise as possible. It is very important for the business owner to know what they're going to need the funds for. It's also very important to know if the business is profitable and to know more or less what their financial outlook looks like. Charnel, would you like to take over for the entrepreneur training program, talk a little bit about the program?
Sure thing. So our entrepreneurial loan program was designed specifically for those folks who were just getting into small business. Is there an echo?
I can hear you.
Okay, awesome. So the entrepreneurial training program are designed to really help small businesses who are learning about business, getting their feet wet in the area, and just orientate them in information that they may not know on their own. We have partner organizations within Chicago, St. Louis, Detroit, and Milwaukee to support small businesses with this entrepreneurial training. The one thing that is so special about this program, very good.
Is that any better? Is the echo still there? Great. Okay. Yes. Okay. Okay. Awesome. So, the entrepreneurial training is specifically required for startups because most banks are comfortable when you have a year or two of profitable operations. And if you don't, the entrepreneurial training is a requirement. We have many partners. And so if you've success, oh, hell no. I'm back. Can you hear me? Awesome. Okay. So because we as bankers like to see a couple years of successful operations, and that might not be present if a business is a startup or in existence for less than a year. So the entrepreneurial training program is very important. We like to see a certificate of completion from one of our partners that have provided that for you. And so please make sure you have that available if you're interested in applying for financing. We have the option of a loan or a line of credit, which is a great option because based on what you need the funds for, one of those is more advantageous than the other. So for our term loan, for a startup, you can get up to $10,000. For an existing business, you can get up to $30,000. And right now, we're offering a promotion of 5.99%. We've actually extended that until June of this year to apply. And so, as long as we have a completed application submitted by that point, that 5.99% will be the interest rate that you will be eligible for. There are no fees or prepayment penalties associated with our program, and our maximum term is 3 years. The option with the line of credit, it is a variable interest rate product. I believe right now prime is 3.5%, and lines of credit renew on an annual basis. So you will go through the same application process that you did initially to be able to take advantage of accessing the line of credit. For those individuals who have been in business for a little while and not completed entrepreneurial training, our Easy Path business financing is available. It's provided for small business owners with options to help achieve their business goals. It answers small business owners' questions about loans or lines of credit, help small business owners make better financial decisions for their business. And the Easy Path business financing products are available in businesses located in low to moderate income census tracts in each of the bank's assessment areas. The one thing that is very great about our ETP product as well as the Easy Path product is that there are accommodations made for credit. The one thing that has always been traditionally challenging for small businesses accessing capital is the fact that most banks want to see credit scores of 680 or better. Um, we know that can be very challenging for individuals, especially individuals who have gone through the kind of challenging environment we're experiencing now with pandemics. People may have lost their normal income. So the accommodations that we have for these two programs are really important. If you have successfully completed entrepreneurial training, you can be eligible for financing if your minimum credit score is 600. And for the Easy Path, your credit score would need to be at least a 620. And that really helps a lot of people access capital if they're having some challenges with respect to their credit scores. The loan product for Easy Path is up to 25,000. There's a 1-year term, also has fixed interest rates of 5.99% with no fees involved to get that financing put in place. You have to have at least 1 year in business, and how we evidence that is through your tax returns. So if you've been in business for at least a year, then you're going to have a Schedule C or you're going to have an 1120S, which shows your business operations. And the one thing that I want to encourage folks to keep in mind is sometimes at the very beginning of the process, you may not be generating a lot of revenue, or your expenses may exceed what your revenues are, please go ahead and have your business tax returns prepared anyway, because that is something that is not unusual for us to see as lenders, but it does at least evidence that you're in business, you're up and running, and you're just in the early part of the process in terms of being able to see really successful and financials that the average banker is accustomed to seeing. The one thing, please keep in mind, I know people like to say that, this is my business credit, my personal credit is a separate thing, but we are going to require you to personally guarantee any debts that you have when you put this financing in place. So a personal guarantee is required. The Easy Path revolving line of credit, very similar to the ETP line of credit. The funds are drawn as needed. When you are approved, you are given a line amount that you're approved for. You're going to access those funds as needed. It is not a credit card. So you can get approved for a line of up to $25,000 if your revenues are strong enough, your credit is strong enough, and the cash flow supports it. Every year, you're going to renew that. Again, the variable rate for this particular product is prime plus 4. So I believe right now we're looking at 7.25 on that, if I'm remembering correctly. You must have been in business for at least 1 year. And again, your FICO scores must be of 600. Now, when we say FICO scores of 600, we're really talking about the middle, because sometimes the credit scores are almost never going to be the same on all three reports. So we're going to look at the one in the middle because that one tends to be a little more fair and accurate. Sometimes the TransUnion report especially may be a little bit harsher for some reason. We've just noticed that historically, we're not really sure why that is the case. We also have available a step loan. Now, even though a step loan is called a loan, it is in fact a secured CD product. You may not be in the position right now, even with the credit score accommodations that we make through our program, but you want to begin a relationship with the bank. So to create a trade line, you can have a CD created. Instead of you receiving funds, you're going to deposit funds to build up that CD. And you have the option of choosing how much you want that to be. It could be anywhere from $500 to $10,000. You can have a 12-month term up to a 36-month term, and there's a fixed rate of 5% that grows on that CD, and there are no origination fees associated with that. The proceeds are placed in a CD account that is held at CIBC, and the term on the CD matches your loan. So you need to prove sufficient income to make loan payments. The loans are always 100% collateralized, and because you are actually depositing funds, there is no FICO requirement. So if you have a challenging credit score that doesn't meet the 600 number, this might be the way you want to get a relationship started with the bank. Our Community Plus loan is that loan product that once you have grown in business, your credit score is stronger, you've been in business for more time. This is the advantageous product in terms of the interest rate. This particular product can go up to $100,000. It could, again, also be a loan or a line of credit or combination of the two. It provides financing at that below market rate of prime. You must be in business for at least a year. On average, we usually see businesses in operation for 2 or more years are qualifying for this product. Gross revenues must be under $1 million. When we say that, this particular product and its conveniences are only available if your revenues are under $1 million. Once you exceed $1 million, you're really getting into that established business banking client. And so some of these accommodations will no longer be available. But the reason for that is if someone is generating $1 million in revenues, then they're pretty much a very strong business that's growing. And that's what we like to see. So with this particular product, you have the option of having a term loan of 1 through 5 years. at a fixed interest rate of 6 or 7% with no fees involved to put this financing in place. The line of credit again renews on an annual basis, and the interest rate is going to be prime +2 with no fees. And the minimum credit score for this particular product is 660. And again, a personal guarantee is required. For those business owners that have a brick and mortar, we have a Beautify Your Business loan. A lot of our corridors are suffering a little bit. You might be in an older building and you just want to give it a little sprucing up from the outside. You're going to take advantage of a Beautify Your Business loan product if you're interested. We offer up to $15,000 if you're located in those commercial corridors that have a special service area. This could be used for signage. It could be used for doors, windows, repairing a little brick and tuck pointing, and just making the outside of your business look a little more inviting. Our next product is business overdraft protection. Now, this is the kind of thing that a lot of people don't give a lot of thought to, but on occasion, there will be instances where something has happened with respect to your deposit account with the bank. And when I say something has happened, I mean you may accept a check from a client or customer, and then that check is not good because you anticipated those funds being available. It has now overdrawn your account and created a problem for you as a business owner. Because we know that this can occasionally happen, this business overdraft protection was created for that purpose. So the applicant and the business must be in the bank's assessment area. You must have a small business checking account with the bank. Business revenues cannot exceed $1 million. Any owner or partner in the business that has 20% interest of the business must be also on this application. And so this is an advantageous product because you never want to have hello? Can you hear me? Oh, I'm sorry. Okay, my face hit the phone. So this is a very advantageous product because it protects you as a business owner from not having overdrafts associated with your account, because that is one of the things that we evaluate when you're looking to grow your business, is how you've successfully managed your business account. A lot of people are familiar with small business administration and those loan products, especially these days with PPP loans and things of that nature. The SBA tries to do things to support small business. The traditional SBA products available are the 7A loan or the 504. The 7A can be used for acquisition, construction, expansion of owner-occupied real estate, purchase of equipment, and permanent working capital. The maximum loan amount for a 7A loan is $5 million. For 504 loans, these are really provided for long-term fixed rate financing for land and businesses, and they must be done in conjunction with a community development corporation. Annette, I think you're going to take on the commercial real estate section.
Yes, thank you, Charnel. Thank you so much for that presentation. So we're going to talk a little bit about commercial real estate loans, which is another big product. Commercial real estate loans are, there's owner-occupied properties. There are loans available for up to 75% of value or purchase price. Typical loan terms have a 25-year amortization with a 5-year balloon. Properties can be owned individually or corporately. So when we say a typical loan term has a 25-year amortization, basically the payments are based on 25 years and the loan matures within 5 years. So, and that's typical across the industry. Most commercial loans only have a 5-year fixed rate period, and that's why they call it a balloon. And 75% of value or purchase price. So in other words, if a property you're purchasing is $100,000 purchase price, we would require for you to put 25% down plus the down payment. Owner occupied properties. So the commercial component needs to be 50% or more in order for us to be able to finance a property that is commercial. And we also have traditional commercial lending. So CIBC provides financing solutions tailored to your needs. So in the community development group, we specialize in small business owners under $1 million in revenue and typically loans under $100,000. But once you go over that $1 million threshold, then you fall into the more traditional commercial lending. Our understanding of many unique aspects of your business allows us to work together to accommodate your financing requirements. So we employ our creativity, understanding and experience and expertise to build the right solution for you. So we have traditional revolving lines of credits, term loans, and letters of credit. So whether you want to purchase inventory, manage cash flow, take advantage of other options that come your way, a revolving line of credit will help your business, help your company. Convenient access to cash to continue working the capital. Term loans, a term loan can give you the resources you need to finance expansion, to add inventory, to invest in new equipment, or otherwise help your company grow. So a term loan, basically, you would pay principal and interest right away. A revolving line of credit allows you to utilize the funds when you need the money, not, you won't pay interest on day one. And letters of credit, a letter of credit provides assurance to your trading partner that your obligations will be paid using the bank's credit as long as documents called for in the letter of credit meet the terms stated. There are many different letter of credit options, so it is important to talk to one of our relationship managers to learn more about our letters of credit. Okay, so all of our loans are subject to credit approval, a personal guarantee required for all smart business loans and lines of credits and Community Plus loans. Terms and conditions apply. Easy Path Business Loan Program is limited to business located in low to moderate income census tract in the following counties: Illinois, Cook, DuPage, Grundy, Kane. They're all listed here. We do business in Michigan, Missouri, and Wisconsin. So we will open it up for questions at this time.
It looks like
Madam
there's a few in the
Charnel.
chat.
Oh, I thought I heard an echo. Perfect. All right, well, thank you so much for the presentation. We will now go into questions. If you have not sent your question in yet, just use the chat box over on the right-hand side and start sending in your questions. All right, first question we have. Oh, in regards to the training program, would all partners in the startup need to go through the entrepreneurial training program, or is just one representative from ownership needed?
Only one of the owners need to attend the program. Not all of the partners or members of the company need to attend. Only one needs to have a certificate, and they need to have more than a 20% interest in the company.
I do want to mention that this webinar is being recorded and will be made available on our YouTube channel, which is youtube.com/Chicago BACP, and I will post that in the chat box. Someone is asking, what is a balloon loan?
So a balloon loan typically is on a commercial real estate or a commercial deal when, so at the end of the term, so let's say it's a 5-year term loan, the balloon means that there's going to be a principal balance due at the end of that term. Because typically these types of loans are amortized over a longer period. As in the example in the presentation, we said 25 years. So that loan would need to be refinanced 5 times if there's a 5-year period, 5-year term.
Next question is, what do you mean by the loan matures in 5 years?
What that means is it expires, so we would need financial information from the client to renew the loan for another 5 years. So typically, when it's a 5-year loan, it will have a maturity date and it will have a balance at the end of that term.
And do you know any detail about the federal loans that are offered?
We are only familiar with the PPP loans that are offered by the FSBA at this time.
If someone would be interested in applying for the Small Business Administration Paycheck Protection Program, do you just recommend they contact you?
Yes, that would be great.
Okay, perfect. And just for those that are unaware, the Paycheck Protection Program is a federal program run by the Small Business Administration. However, in order to apply, you need to go through a lender. So exactly what Annette just said, if you are interested in applying or maybe getting a little bit more information, feel free to reach out to her. I am putting the information for the website in the chat box, so you could also check it out there. A question is, what are funding resources for startups?
The funding resources for startups at this moment are the relationship that we have with the City of Chicago workshops, which is this one of the workshops that you are attending. 9 workshops within a 6-month period would need to be attended in order to receive a certificate. And with that certificate, you can apply with CIBC for an entrepreneur startup loan.
And the information Annette just mentioned, I put in the chat box. If you are interested in signing up for the program, you just need to email BACP outreach at cityofchicago.org. Or if you want to learn more about the program, you can visit chicago.gov/business education. A question is, what is meant when the loan rate is variable +2?
So basically, we take the prime rate, which is established by the government at 3.25, which is a floating rate, plus 4%. So in essence, the interest rate for the entrepreneur training program, Easy Path program, would be 7.25% floating. So prime is 3.25, and that could change, plus 4%. So that's what the product calls for, prime plus 4%, which in essence right now is 7.25% floating.
What type of loan products do you recommend for someone wanting to purchase a franchise?
They can contact me directly and we can put them in contact with a commercial lender to see how we can help them achieve that.
And can you go over a little bit more and again about recommendations for new businesses to establish credit?
So what is key in establishing credit? Now, of course, there's your personal credit and then there's the business credit. We typically look at your personal credit. We want to make sure that your credit score meets our criteria. So for our products, the minimum credit score is 600. So in order to establish that, you would need to have no tax liens outstanding. If you had a bankruptcy, the bankruptcy has to be within, it has to be dismissed and has to be at least 6 months from it being dismissed. And timeliness on the payments is what's key. We look at to make sure that you are on time on your payments with your creditors.
Good. I see a lot of questions coming in about the Paycheck Protection Program. Once again, that is a federal program, so it's not city, it is not state, it is a federal program. And CIBC, Annette, correct me if I'm wrong, you are a partner lender of the program. Is that correct?
Yes, we are a partner in where we have funded PPP loans for clients. Typically, we do need for the client to be an established client with the bank, but we could talk offline and talk a little bit further as to how we can maybe guide them.
Absolutely. So once again, if you have any interest in the Paycheck Protection Program, PPP, please reach out to Annette, or you can get some more general information at sba.gov/PPP. And going back to the entrepreneur training program, if a startup has 2 years of tax returns, a business credit line in good standing, but has not began to sell their product to generate revenue, would they still qualify for the loan?
We would still take them into consideration because they are, although they have two years in business, we determine them to be no longer a startup when they're profitable. So if they haven't sold any products, they're still considered a startup. So we would consider them up to $10,000 in the form of a line of credit or a term loan, considering other factors such as their middle score being 600 or better, and then other things that we look at. But we would take a look at a business that has 2 years but no income yet.
A question is there a loan for startup businesses to purchase a building and rehab for business needs?
The funds would only be up to $10,000, and we would not extend funds to purchase real estate. It would be for the business component of it, not to purchase a physical piece of real estate.
And can you repeat what the rate for a CD product was?
So the interest rate for the loan would be 5%, but the interest rate for the CD would be based on whatever the market is. So we would need to determine what the term is for the CD to determine what the rate would be for that CD. But the interest rate for the loan itself would be 5%.
Good. Is there a seed capital for startups without interest implication?
We do not have a program right now with no interest.
Okay, I do not see any additional questions coming through. However, if you guys do think of any questions, Annette and Charnel are your resources with CIBC Bank. Annette and Charnel, I do want to thank you so much. Oh, and I'm sorry, we actually do have one more question. So someone is asking information about the SBA PPP program. So once again, it is a federal program that you need to apply through different lenders, and CIBC Bank is a lender. So my suggestion is, and Annette Charnel, I believe you agree, is to reach out directly to you guys to see if you qualify and what other options there would be. Is that correct?
Absolutely.
Yes,
Absolutely.
absolutely. Yes.
Wonderful. So I do want to thank you both again for joining us. For those who did not have their questions on hand and ready to ask, by all means, please reach out to Annette and Charnel. Their emails are listed on this slide, and I will type them in the chat as well. And if you guys need to rewatch any of this webinar, just to gain some more information, feel free to go to our YouTube channel, which is youtube.com/Chicago BACP. Annette and Charnel, thank you again so much for joining us.
Thank
I
you
wanna-
for having us.
Thank you. I want to thank all of the attendees for taking their time today to attend this workshop. We really appreciate it and hope that we can help you with your financing needs. Thank you to Elisa and the Chicago BACP for having these wonderful workshops. I hope you all have a wonderful day.
Okay, thank you so much, everyone.